Hello, my name is Josh Camps, Regional Crops and Soils Educator with UW-Madison Division of Extension. Thank you for joining my portion of the conversation today. Sorry I was not able to join in person, but hopefully we'll have some things to talk about and then some questions in the future moving forward. So looking at that crop production planning decision for 2024, what are some of the farm economic situations right now? What are some of our yield goals? And then also some of the agronomic considerations that we have to make for the upcoming year. So a few things that I would like to share today in the outline. A weather outlook. Are we weather outlook ready? Is how I'm going to pitch it. Ag sector economic situation, crop production yield and profit goals, seed traits and pest management, balancing soil fertility decisions, and that risk of soil and nutrient losses from our fields. So where are we at with the weather outlook? I'd like to take a peek back to see where we've traveled in 1 year. So this is the 2022, basically entire year county precipitation ratings. This is based off of average compared to a 130, roughly 130 year record here that was kept track. So the colors show up at the bottom of the screen. I'll discuss this one just a little more. The next ones will go quicker. But if you can kind of zero into Wisconsin, we were near average to maybe slightly above average for the 2022 year. Now I'm going to click ahead to this year. So 2023 definitely had that shift towards the east of some of the drier conditions. And then we were into the below and much below average for a pretty good portion of the southwestern part, south central and southeast part of Wisconsin. Okay, I always like to look at the soil moisture index. This is reported to us weekly during the cropping season. And if we look at the southern part of the state again for Wisconsin, I have 2022 and 2023 both up there. And there's a lot of different places to look, but let's maybe look at I'll bring my cursor over. Let's maybe look at the subsoil moisture here in the southeastern part of the state. So we have 71% of our soils were adequate in 2022 for subsoil moisture. And then if we look at that compared to 2023, we're at 69%. So what that tells me is our soil moisture has rebounded throughout this growing season. We harvested our crop, and there are some soil moisture levels that are similar to last year at this time. Okay, another way to look at this is September of 2023. So if you look at all of that brown color soil moisture rating across much of Minnesota, Iowa, Illinois, Wisconsin, we were very dry September of 2023. Just going to go ahead and move that forward now to December. So that has changed slightly. That brown color has lessened, and we're more into that red area, which means that our soil moistures are improving from September through December of this year. And this is another way to look at soil moisture. This is a drought monitor picture that was put out in December of 2022. So much of Wisconsin is not showing any risk of drought. We're going to move that forward 1 year. This is this year. So we definitely have some pockets that the drought is still persisting in parts of south central Wisconsin, but probably not anywhere close to the level we were at this summer during the growing season. Okay, then what are we thinking about for next year? These are outlooks for temperature and precipitation, and these are updated as of the 16th of November of this year. And we're looking out at a 90-day period for March, April, and May of 2024. Okay, so the first one that's up is temperature. Really in that equal chances of above or below our temperature averages for March, April, and May. of next year. And very similar as we go to April, May, and June. So I just slid that 30 days forward, pretty much in that equal chances of above or below. And then we slide that into May, June, and July. So getting into that front part of the growing season, once we have our crops pretty much planted and they're off and going, a little bit of an increased chance of temperature above average at that point. Let's take a look at precipitation on that same that same time frame. So March, April, May, we're in that equal chances below or above for precipitation. And we go April, May, June, it really gets even more equal yet. The below and above are in the far corners of the country. And then we get into that May, June, July time frame, and we're a little bit closer to the above precipitation outlook than we are the below or the equal chance. So it gives us just a little bit of a forward picture. What can we expect? Currently, our soils are sitting pretty good for soil moisture, but we do need to receive snowfall and spring moisture to be able to keep those soil moisture levels at least at where they were going into last year's growing season. Okay, shift gears a little bit here and take a look at where the farm economy is. The ups and downs, we are all used to that in agriculture. But what this chart is showing is the net farm income for roughly a 20-year period for all sectors of agriculture. So we are kind of coming down a little bit from some of the highs, the most recent highs in 2022 for that net farm income. What about expenses? What about the other side of the equation? So expenses are kind of showing a little bit of a rebound. So we kind of had a peak. This is a different scale. This is roughly a 50-year scale compared to the 20-year scale of the last chart. But if you can see the way the lines are moving, some of the expenses had dropped in maybe the 2018, 2019 timeframe, and then those are definitely increasing there into 2023. So something to keep in mind how the income and the expense side of our farms, what are some of those larger pieces that are at play besides any decision that we can make on our own farm. Okay, and bear with me, I'm not an economist. There's a few more of these charts as we go through the first part of this presentation. But I just wanted to give you a few different ways to look at this, to look at what is that economic situation on our farms for the upcoming year. So shows a bar chart here, and we're not necessarily as interested in the total amounts on either side, but more the movement or the direction that this is going. So this would be indicating that going into 2022 we're on more of an uptrend when it comes to some of the costs to do business in agriculture, which I'm sure is not a surprise to anyone that is actively producing. And then just a little bit of a scope here for 2022 into 2023. What is that change between those years? That light colored blue is 2022, dark colored blue is 2023. You can see we had some increase in costs for this last production year. A couple of the ones that moved a little bit farther from 2022 than others. Interest got a little bit wider. Some of the costs that it takes to purchase livestock and poultry. So that initial investment in maybe stock to feed on our farms, that has a little bit of a gap. Those are probably the two main ones, whereas fertilizer and fuel, those may be backed off just a little bit going from year to year. Okay, the direct payments is another piece that we definitely need to keep in mind when we're figuring out the budgets for the upcoming year. It really does seem with some of the prices that we've had and some of the yields that we are a little bit lower on receiving any of the government payments, especially from the COVID pandemic times. Those payments, as you see here, were really important to help keep us whole as close as possible, at least with some of those unprecedented times and market movements during 19, 20, and 21. Okay, just a couple more charts here. Hopefully we can switch over to something a little more exciting. So this is farm sector assets. So real estate and non-real estate over like that same 50-year period for the United States. Just kind of shows that non-real estate asset really has stayed consistent over time, and the real estate is the piece that has led to more asset value or less, and really drove the height, and I would say the borrowing power of the U.S. farmer. Okay, and then on the debt side, also very similar, that non-real estate debt, although there are bars that you can see are quite a bit longer than others. Really, that real estate debt has really been driving, where we're at as an economy when it comes to debt. And I'm sure there's not a surprise there. If we've tried to participate in a land auction recently, or looked at trying to purchase or rent additional farm acres, ultimately really becomes a challenge to bring those acres into our farming system. All right, and taking just a little bit of a look here, this is a USDA NASS chart. This has 10 years worth of data on it. What I want you to kind of focus on here, and why I included this chart, look at the three different inputs, maybe some of the three main inputs that we have on our farms, chemical, fertilizer, and fuels, and see where they spiked in that 2022, 2023 timeframe, and have come down, but where they go from here, I think, is yet to be seen. Maybe a little bit of an upward trend if we're looking at fuels, or if we're looking at chemicals, perhaps a little bit lower moving trend if we're looking at fertilizer. Okay, so this is looking at machinery and supplies, a little bit of a more gradual upward trend. Probably need to plan and figure that into our budgets, is that unless we can have that opportunity to take advantage of a dealer sale, or pick something up at an auction, we most likely are going to be needing to pay more for machinery, supplies, and repairs moving forward. Okay, and this is on the receiving side, what by sector. So the red line is agriculture production in general, the blue dotted line is livestock production, and the green dash line is crop production. It just shows that we had some spikes. 2023 was a good year for livestock and for crop production, and then both have declined, what they're forecasting here into 2024. Okay, definitely wages are a piece that we need to keep in mind. If you look at the non-farm wage or the farm wage, just how that has moved, and that's over a 40-year period is how this chart is laid out. So even if we go back about 10 years, we're looking at farm wages. I'm just going to grab a number off the chart, around $12 an hour, and we're moving up towards $17 to $18 an hour in 2023. Okay, so all these economic factors have an impact on our bottom lines. You are all aware of this, but just wanted to take a little bit of time to talk through some of this. Here's some cropland sales in the state of Wisconsin, and there's not a tremendous amount of data here as far as number of acres sold, but here's some of the counties local, I guess, to the south central and southeastern Wisconsin that I wanted to include. There's an average price and then a high price for 2022. Some of that data you can see on the bottom, there's an asterisk there. A few of the counties, we did not have any updated information, but some of that will be coming now for 2023, and we'll be able to share that here moving forward. And then rent, also the other piece of being able to own and being able to operate with producing crops, land access, I should say. The change from 2022 to 2023 is on the right-hand side. So Some counties did move up a fair amount. Some counties stayed the same, if not going down. And I will say that this rental survey, it's pretty challenging for us to know how many different inputs of data have come in on this, or to really know like what parts of each county submitted information. So this is merely an average. You might want to say a starting point or just like a conversation point. Ultimately, land rental value is going to come down to about five main factors. First being the inherent soil quality on the farm. Maybe the second one being access or competition for that land. Three perhaps could be the size and shape or the boundaries of those farm fields. And then maybe some of the nutrient management and some of the soil management that's been done in previous years. All those factors need to be taken into account when we are determining, what is that land rental rate that's fair for both the renter and the landowner. Okay, taking a look at the entire country, Wisconsin is in that $6,000 to $8,000 an acre range, kind of on average, whereas Iowa, Illinois, Indiana, then some of the states in the West and the South are up over that $8,000 per acre range. Okay, just a few points we're going to make here on this economic data from FRED, from the Federal Reserve Economic Data. This gets pretty deep, and I will not be able to explain it in a lot of detail. But let's take a look at the charts and kind of the movement on a percentage basis compared to what it had done in years past. So this is about a 20-year chart showing the price of corn. So this is the producer price index, the percent or the return, I guess, that you receive as the farmer producing the crop. So we had kind of a spike there in 2022 and kind of a downward trend into 2023. Really does mimic the corn price. If we think back to maybe one of the last higher corn prices, it was in that 2014 time frame. Soybean though moves just a little bit differently. Maybe not quite the peaks and valleys. A little bit choppier, maybe a little bit more even from year to year, but also shows a little bit of a downward trend in 2023. And let's take another look at the input side. This is pesticide, fertilizer, and chemical. And this would be what we would expect to have to pay for some of those products. So we had that spike, and then that coming back down of prices there from 2022 into 2023 timeframe. Farm machinery though is a little bit more steady. I think we saw that in one of the charts that was earlier, just kind of that slow building over time. So really, makes that a challenge for us as we're trying to purchase equipment and update equipment, with the ups and downs of our markets and the ups and downs of other inputs, but equipment, machinery seems to be on that more of that steady upward movement in cost. Okay, getting a little bit closer to the farm here, thinking about the corn prices by month. This is 10 years worth of data, just kind of taking a snapshot here. Dollars per bushel on the left hand side, and then the years are underneath. So we saw that movement up into late 2022 into 2023 with a spike in corn prices, another kind of peak there early in 2023, and then kind of a movement down now into 2024. Soybean prices, kind of a similar fashion, higher towards the beginning of this 10-year chart, a little bit lower, and then some peaks here from 2021 all the way through 2024. So I think it's important to understand that even though these are both grain crops, they do move a little bit independent of each other when we're making those crop rotations for our acres. Okay, a pretty important budget that I'd like you to take a look at. We'll talk through this just a little bit. This is available at the University of Illinois. They have a farm economic program. So if you do a search for farm and then DOC, you'd be able to find some of these articles and some of these projected budgets for the upcoming year. And what this is crop budgets for northern Illinois, so about as close to southern Wisconsin as possible. And there's all different pieces of crop inputs here, different numbers. You look across the top, you see the rotation, so either corn after soybeans, corn after corn, soybeans after corn, soybeans after soybeans, or wheat. What I want to direct your attention to is, I think what this presentation has been building to so far, and that is the real risk when we're looking forward for the upcoming year. We're looking at the operator and land return. So what that means is that number across the bottom is what we have available as the operator of that acre for profit and to pay for our land cost. So to either pay for the rent or to pay for owning that property. And those look pretty slim. $246 in that corn soybean type crop rotation, 183 that corn on corn. Soybeans a little higher, soybeans after soybeans a little higher yet for some reason. And then wheat kind of shows a negative right here if we're taking a peek at that just a year at a time. So we can put our own numbers in here. We can go back up to the top, look at that yield per acre, price per bushel, whatever we are expecting to receive for the crop. Maybe some of our costs are different, but ultimately, as we work down through that, we're all going to end up with that operator and land return value for our own farm, for our own, each acre on our farm. And that really does depict some of the risk, looking out at 2024. Okay, so here's a tool to work on this on your own farm. It's the Crop Budget Analyzer tool. If you want to find that, it's at the Crops and Soils Extension website, or definitely let me know. I can share that spreadsheet with you directly. We're not going to work on the spreadsheet itself just now during this presentation, but I did want to just talk about it briefly. So there's some instructions, and you can put in some fertilizer costs, and then you choose whatever crop you're going to grow across the bottom tab of that Excel document. And the point of this tool is to put in your cost, put in your expected yields and profits, similar to that farm doc statement that was shown earlier, but then really make this fine-tuned to your own farm. As you go down through this, you'll notice at the end of it, there'll be a sensitivity analysis. So it'll kind of give us a little bit of an idea of what is maybe the risk, or what's the chance of being profitable if we have a move in prices, either for our crop or for our cost per acre. And that will kind of help us be able to answer that. And hang on one second.